Hi, let's cover my Elliott Wave analysis on Bitcoin, and later in the video also talk about the long or short opportunities that we have locally from an Elliott Wave point of view, and I'll also explain my approach yesterday with this bit of price action, which hopefully is going to be educational. So the bullish scenario remains a multi-1-2, 1-2-1-2 continuation to the upside. Preferably your second wave 2 is finished here at this particular low, because this low just missed out on touching the 886. And the 886 is a rare retracement target for a wave 2. You don't like a wave 2 to move to the 886. It will lower the probabilities for this whole scenario. It's not an invalidation, as the invalidation is this low at 106.6K. So for the bulls, we like to finish a corrective structure to the downside at this low. And if we then have a look, then we preferably finish a double zigzag, a WXY, ABC, WX, ABC in a wave Y, preferably then finishing at that particular low. Now I do have a red line here on my chart at 113.7K, which says invalidation unfinished WXY, just in case you get a W, X, and then A, B, and then a wave C to the downside. Of course, the issue is, in this particular case, that your wave C is then very, very likely going to touch the 886, which lowers the probabilities for the bullish scenario 1-2-1-2 and eventually look for a wave 3 towards the upside. It's not an invalidation, and that is something we have to keep in mind. Preferably for the bulls, you finish at this low, and that's it. Move towards the upside. In the bearish scenario, you're looking for an impulse to the downside, a motive wave, either an impulse, a 5-wave structure, 1, 2, 1, 2, 3, 4, 5s, and then move up in a 2B and continuation down, or multi-1-2, which is just continuation down like this. Like in the end, you just go down. The bears really want price to move below 106.6K because it invalidates the multi-1-2, which is basically the remaining bullish count at the moment. The only bullish count that remains if you take out 106.6 would be a larger diagonal, 1, 2, 3, 4, 5, but it's way too early to even consider such options. So in other words, take out 106.6. Probabilities are better for the bears, and to take out the low that we have over here at 103. So with regards to the scenario, we want a motive wave to the downside followed by a 3 up and then continuation to the downside. That means that here we want to count a 5-wave move to the downside. So we zoom in once again, go to the 15-minute now. And we want to count a 5-wave move towards the downside. So we then have a wave 1, 2, a 3, 4, and a wave 5. You're looking for price to continue to the downside and preferably take out this low. There is a way to finish this wave 5 over here. I do think it would be a bit more chic, a bit nicer if we can finish maybe with another low. Also, just because you then touch the 886, most likely, maybe you're even going to invalidate a multi-1-2 by taking out this low, which would be ideal. And then you're waiting for a retracement, as after 5 waves, 1, 2, 3, 4, 5, you look for a correction and continuation. Now, if price is moving to the upside here and touches the 0.618 at 113.4K, you're not looking at an unfinished impulse anymore. So if price can move up, touch this level, you're going to put wave 4 here, wave 5 here, and then it's all about the retracement. Is this a 3-wave move up? Well, we look for price to move down. Is this a 5-wave up? We're looking for a 3-wave correction to the downside and then continuation up. Take it step by step, and I'll explain in the opportunities section in the video in a little bit how one can approach this. Right? You don't have to like try and trade on ideas that are not yet necessarily confirmed. Now, the most bearish option remains a multi-1-2. I just want to cover this. This is an alternative bearish option. It's 1-2, 1-2, 1-2. You go down. Preferably, your lowest degree wave 2 here is finished at this high, because if price would move towards the upside here and take out this high at 111.6K, it will reduce the probabilities for this scenario because of time. This last wave 2, like lowest degree wave 2, is then going to be about twice the size of this one and 3 times the size of this one. And that starts to be very long. It's the 3 that starts to really impact probabilities. Again, it's not an invalidation because the invalidation is the high at 113.7K. But if you do move up, You take out this high at 111.6, the probabilities go down for a 1112, and the invalidation is the previous high of 2 at 113.7. So there's something we can keep in mind. Now then, let's talk about opportunities, because many people, when analyzing the charts and analyzing Elliott waves, they get very stuck and focused on one Elliott wave scenario and hyper focus on trading that particular scenario. But as you'll see in my conclusion as well, you can trade Elliott waves without being stuck to one specific scenario. And I like to show you what happened over here yesterday and how I approached it, plus the opportunities that are there now. And you'll also see that basically you let price come to you. You're not necessarily trying to be too early or preempt what price is doing. So let's go to Discord for a second, because price moved to the downside yesterday. This was the range here at about 113K. Price touched the 886. Now, generally after the 886, you expect a little bit of a bounce, either move up to 114.4 and then go down, or you get a little wiggle up and then you move down. Bias is down. Now let's compare it with the chart over here. So basically that photo was taken when price was here. That's the 886 touch. And this is very typical. Price touched the 886 and it moved to the golden pocket. Golden pocket, and then eventually it reversed. Okay, that's nice. But then if you remember correctly, we had support here at 111 in the update yesterday. So price eventually moves to the downside and volume is increasing as price is moving to the downside. And that's important from an Elliott wave point of view. Volume is important. So then we end up at support here, weekly naked point of control and the range point of control, but volume is the highest amount of volume in the low here. In this whole move to the downside, volume is now highest. So what I then write here, volume increasing, I continue to observe. Now as price is then still at support over here, price at support at 111, I write the following. I basically say, like, because the volume is highest in this low, I would actually prefer to see a bit more downside in a nutshell. So here at support, highest volume in the low, from an Elliott wave point of view, it's not too interesting yet unless other tools are used to observe any signs of strength, order flow, CVD, etc. Right? That can of course provide an opportunity at support, but from an Elliott wave point of view, moving into support with the highest amount of volume is just a bit more risky for long opportunities, right? So basically photo 2 and 3 show two options I have on the chart, which in both cases would lead to more downside, preferably. If price would form a more significant low and creates a larger move up, I'd like to see a move back up, which is a 5-wave structure followed by a 3-wave retracement to give an opportunity. And then the next photo basically is, hey, when it, like, highest volume here, you can see it as well. We have a low here, this move down, highest volume is in the low. For me, Elliott wave point of view, it's higher risk. I'm not interested. So what I like to see is, right, unrelated to the count, get 5 up, get 3 down. If price moves up, there's a trend and turn opportunity. Trend and turn is one of my methodologies, basically. So eventually you slow down into an area of resistance, price curves, decreasing volume. That's for another video. And then you get a move towards the downside. If the move down is corrective, another opportunity. So these are two opportunities to keep in mind. But I don't really have interest yet locally because of the volume, because of how sharp price is moving to the downside. And basically with every count that I had here, I just had different ideas yesterday. I was sharing different counts and different ideas, but the opportunities were all the same. Like wait for 5 up, 3 down, 5 up, 3 down. Here, 5 up, 3 down. In other words, no interest at that particular low. Another thing that I like to see as well, if we would create a more significant low, what I would like to see is price creating higher highs and higher lows with consistent bullish CVDs. The first one is generally then not very interesting on very low time frames, but if you get a second CVD, third CVD, fourth CVD, you eventually expect price to continue. And the moment the CVD plays out, which means taking out the high in that case every time, it's just management, right? But it can provide an opportunity. Keep this in mind. So then we get to the price action. This is just more shenanigans. Eventually we have the news. Then of course also here with the news, we created another low. So clearly the support failed here. There was no interest anyway, as price was moving down on increasing volume. Now we have another low, again on the highest amount of volume. So basically my story is the same, where I say, well, it's not interesting at the moment, right? So, and also previously with the previous bounce at 111K support, there were no bullish CVDs with this move to the upside at all, only a bearish CVD. There were no bullish CVDs. So there was just no sign of strength. And then I say there's news, prefer to let price settle, etc. Then I already had my ideas here. Maybe there's a finished WXY. Maybe we still get a 4-5. And then this was the last photo of yesterday. A WXY unfinished to move down again, because this low was on the highest volume. So it would be nice to make another low on lower volume into 108K support. And then I write here, if price comes down again, preferably that happens on lower volume, think trend and turn methodology, which is an opportunity to go long into support. If you range here for a little bit, then come down lower volume compared to the previous low into support, there is an opportunity to look for a bit of a bounce to the upside. So there were different scenarios, but at every time there was like no opportunity. We didn't get 5 up, and the highest volume was in the low. So preferably, if we go down, I want to see another low on decreasing volume. And then we go to what we have today, which is the analysis. Let's see, this is just the Elliott Wave Scenarios. Then we get to this here. So this was my photo of yesterday. This is the photo today. We make a lower low on lower volume into an area of support. That's interesting. Now there is interest. However, you can also see that price here moved to the downside quite sharply. So one can imagine in this local, this is like low time frame move to the downside here, the highest volume sits in the low here at the moment, right? So maybe you're like, because you're comparing now the volume between the previous news low and this one. So that is lower volume. But I can imagine someone be like, well, we move down, it's a sharp move into support. It's a bit too risky for me. I'm not really trusting it yet. And I can imagine that. I can understand that. So what you then like to do is just wait and see if price is holding that area of support. Do I have it? Yeah, I have it over here. So you like to wait and see what price does. Now, eventually price hovers here. You get this move towards the upside. And this move up from support shows you that at least the area of support is at least temporarily respected. Now, another thing that I like to look at is the photo that I shared yesterday here in the group is get higher highs, higher lows with some bullish CVDs. Now price made the low at 108, and this was the move towards the upside here. Wait, let me show you. This move up, so this is the support, 108. You get the move up, correction down, and then you get this. That's today. When I woke up, this is what we saw. You get the higher highs and higher lows with consistent CVD, which you can see here. Up, up, up. Line, down, down, down. Bullish CVDs as price is climbing after touching support. So if the move down into support was too high risk, because or you're not comfortable because it's moving down quick, like okay, you observe the reaction. Everyone will have their own tools. Some of you will use order flow, some of you will use indicators and whatnot. I like to use CVD, so that's why I talk about CVD. And CVD also has the automated lines, which you can find a free template in Discord as well. And I have a whole video on CVD. But that is basically, so yesterday I was like, well, this would be interesting at some point, but we didn't get it, of course, yesterday. But then here, you do get it. And that's very nice. After touching support, on decreasing volume, you see it respected as well, and then you get this move up. That's beautiful. Okay, so this is the conclusion that I'll share in a second as well. So then we get to the opportunities on the chart that we have now. Open my levels here for a second. So there was an opportunity down here. Based on everything I explained, we were basically leading up to basically what happened here at this particular low. What happens after is just management, and that is having a plan, right? So price is moving up. If an opportunity is taken here, right, you just got to manage it accordingly. If price comes back down, this should never be a loss. Never be a loss. Bare minimum, break even. but it can't be a loss, right? So price moves up, eventually you take a TP1, cover the fees, you move your stop wherever you put it, you move it up to maybe here below this low, right? And then you make sure that the TP covers the fees, plus if it does hit the stop loss break even, you also cover that. So basically it's always going to be break even. If you had your stop down here anyway and you take a TP1, you might move your stop up a little bit further, right? Maybe even break even. This is just management, really depends on how you approach the chart. So then we get to the opportunities, right? So we had this opportunity in the local, but that's gone. That's gone. So what I would like to see now for the bulls is I like to see, quite simply, a 5-wave up, preferably moving beyond at least 113.6K. A 5-wave up followed by a 3-wave down. A 5-wave up would be an impulse, which then preferably follows the trend and turn methodology. You get your 1-2s, you get a 3 towards the upside, which is sharp on increasing volume, and then eventually you start to move sideways again, right, from vertical to sideways into an area of resistance that can provide an opportunity for a short and a retracement. Now this retracement preferably is then corrective. If proven corrective, we can look for opportunities at support for longs. We'll have to wait. Price has to come to us, right? We have the idea, but we need price to show us what it got. This move up can of course become a 3-wave, ABC. And then you go down. Finished impulse, correction, continuation. The moment you see a 3-wave structure up, this leg here, that would be a wave 3 in an impulse. This would be wave C in an ABC. But the subwave structure can be very similar. And also here on the lower time frames, you're looking for preferably a bit of a start with overlap, get a quick move up on increasing volume, and with overlap, trend and turn methodology. This provides, especially if against resistance, a short opportunity. Now this short might be a wave 4, or you just go down. That's management. If you get a wave 4, you're still on the right side, but it's going to be a sideways range. The moment you spot a sideways range and you spot a wave 4, if you get a corrective move here to the downside and sideways corrective move, close or TP because you expect price to continue for a 5. However, if the move down is a 5, you get a 3 and another 5, and then you get a 5-wave structure, 1, 2, 3, 4, 5, correction, you can look for continuation, one can hold on. It's very similar to other opportunities we had in the past like weeks, I suppose, because there were actually quite many. I go to a 15-minute, but here on a 5-minute time frame, if you go to all the content, you'll see this opportunity as well. Here you can see price is moving up. It does so on increasing volume, but as you are here reaching a high, which was a value area high resistance as well, you can see price starts to turn on the lower time frames. So as a bare minimum, you're looking for a retracement in a wave 4 and a wave 5 for bulls. Bears look for continuation down. You got continuation down. There was no sign of a range. Right? Over here, you can see the same thing. You can see price moves up. It did on increasing volume. Then you start creating the ranges on decreasing volume as well. Let me go to a higher time frame here. Moving up on decreasing volume. Right? Trend and turn, make it very simple. It's the trend and turn methodology, which is part of the Kuhn's directional bias theory, as we call that now. So opportunities, wait for 5 up, or at least 3, could potentially give a short opportunity. After 5, same thing, trend and turn, and then look for a retracement. This one is already gone. This, to me, is just a bit of low price action. I'm not really interested in counting this move to the downside. I prefer being more active on like a 1-hour time frame. 15-minute is lowest. So this was like 15-minute stuff yesterday, but we had bigger moves. This is just currently like not very nice wave structure. So, okay, levels. So those are basically the opportunities for the bulls and the bears, right? Levels here, areas of volume support and resistance levels here on my chart. Then you have horizontal time frame horizontals, and only one order block here at the high. So feel free to copy them, of course, if you like to. With regards to news, there is stuff here. I mean, maybe I'll have to refresh it. No. Manage, well, I do that after. I always turn all that stuff off. Friday, October 31st, but we don't see a time, so there is news, maybe not, maybe there is, we don't know. But maybe there's going to be some additional volatility today. Oh wait, it's of course Thursday, but even on Thursday there is no time, so whatever. This thing threw me off, man. Okay, then we get to probabilities, which is also the conclusion, which is a little bit of text. So, in a nutshell, conclusion. From a pure Elliott Wave perspective, as long as 106K, this low, is not taken, the bulls have the edge. Preferably a correction is finished at the low to avoid the 886 being touched, and of course the 106K low being taken. You don't want to see that taken if you're bullish. Bears preferably just take out 106K to make it easy. Take out this low, bulls are struggling because this becomes a 3. Increases probabilities to take the low. And then we'll see. If price moves up over here, where price is now, we'll have to see if it turns into a 3 for the bears or a 5 for the bulls. 1, 2, 3, go down. 1, 2, 3, 4, 5, and then get a retracement and continue. We'll see. Price will show us. We just got to be patient. However, and this is the important part, and that's why I wanted to focus on this so much this video, opportunities can be found without following exact probabilities or exact scenarios, while still using Elliott waves or my directional bias theory, which we're going to publish a free PDF, like 10-page PDF or something later this year. We're working on it. In an ever-changing Elliott wave environment, one has to focus on the consistencies. Know what you're looking for. Let price come to you, not the other way around. One can trade Elliott wave as pure as it is. Of course, if you're looking for a multi-1-2, 1-2-1-2, and you look for a 3, you can trade that, right? Entries are at support. Okay, we had support over here, we had support over here. Average entry maybe is now somewhere over here. You just got to manage it accordingly, right? 1% risk, etc. Using Elliott wave mechanics to find opportunities based on local price action can always be done, right? Even though you're not trading an exact scenario. So over here, we were just looking for another low on decreasing volume and then observe the reaction. This low, yeah, it could be the end of a Y, could be the end of a 5. This can still be like part of a flat like ABC, and then you go down, but it doesn't matter because the opportunity is the same. That is the consistency that we were looking for over here, right? The opportunity is the same, but then the management is different depending on the move up and what comes after. You got a TP, etc., etc. So you're making a plan and you want to see if price is following it. Do you get another low on higher or lower volume? Well, if you don't get another low on lower volume, it's just not very interesting to long the low because it increases the risk from an Elliott wave point of view. Because from an Elliott wave point of view, we know that if there is a high volume low, that might be a 3 and you get a 4 and a 5, right? And price just continues falling. It's something we're aware of. Now, if that happens to be the low and price just reverses, that's fine because you reduce your risk by not trading here, which is just solid planning and risk management. You wait for the 5 wave up, which is the move you miss, but then you're going to join along during the corrective move down. That's the higher probability opportunity. One arguably could say that that happened over here. Price moved down, right? You can see though, volume was decreasing. I mean, this is of course very, very interesting price action, but also here, price moving down, volume decreasing. It touched the monthly naked point of control. There were again bullish CVDs, so there were signs. But if this was not interesting or not part of your plan, you can wait for price to just do its thing, blah, 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 blah. It's moving to the upside. And then if you watch the video of the 22nd of October, I said there is an opportunity here. We're looking for price to turn around. Trend and turn methodology. Overlap, quick move down on increasing volume, and overlap, weekly point of control, looking for price to move up. And then it's just management, right? So there are opportunities to be found, and then you don't snipe the high with potentially higher risk, but you wait for price to show more information, and then you find new opportunities as that information is appearing on your chart. So here locally, On high volume, a low, not very interesting. I like to see another low on lower volume, which I shared yesterday. Do we see a solid 5-wave impulse up? 1, 2, 3, 4, 5. Then there's a potential trend and turn short opportunity at the high to trade the impulse down and trade a corrective move to the downside, preferably corrective, of course, for the bulls, motive wave for the bears. And that is basically the text after. Is the move down after a 5-wave up a 3-wave? 3, 3, 3. Cool. Bullish, looking to join, and long areas of support. Invalidation is then going to be the low. If the move down is going to be a 5-wave structure, right, we have to be aware of a flat 1, 2, 3, 4, 5. And if you then get 1, 2, 3, 4, 5, and you just continue to the downside, then this would be ABC flat, and you continue down. Well, in this particular case, there's not going to be a long opportunity when price moves down because you're looking at a 5-waver, right? You can still trade the end of wave C because the end of wave C by itself is a 5-wave, 1, 2, 3, 4, 5. And most of the time, you have a classic impulsive structure that starts with overlap. You get to move up on increasing volume and then overlap. And this is quite simply your trend and turn methodology, opportunity turnaround. So it's a lot of talking on opportunities, but I think it's important because I see so often that people try to hyper focus on I have to trade discount or this, but there are consistencies in Elliott waves, even though the Elliott wave scenarios might fluctuate. As long as you know what you're looking for, you can get, you can take those opportunities. So after execution, it's just management. You got to know your SR levels, follow up with price is doing, and manage according to your plan. Okay, so it's a lot of information in this video. It's again a longer video, but I think it's important to communicate this, which hopefully is educational as well. Because yeah, we have scenarios, and I sometimes get comments. It's not often, but sometimes I get comments, and they say like, "Yo, there's a lot of scenarios. Just can you show one or two, and that's enough." Well, that's not Elliott wave analysis. There's multiple scenarios. You got to identify the opportunities in the mix and the higher probability scenarios. Here, when we look at this whole structure, there's only two. So that makes it easy. 1, 2, 1, 2 up. WXY down. Ta-da. Where do probabilities switch? 106.6K, because that's the hard no-no for the bulls. As long as you do not take out that low, the bulls have the edge because you're above their invalidation. But it doesn't mean that one goes YOLO long when price is falling. You wait for opportunities as price is falling, and that then happens when you create another low on decreasing volume in support with bullish CVDs locally. And now it's just management. And if you get a 5-wave up and a 3-wave down, there is your opportunity. And you're looking for another leg up to take out this high and maybe continue to take out 116 and move to 120. We'll see. If price falls down here, no problem. This long here should already be break even. Minimum, if not already profitable or closed. If price moves towards the upside here, potential trend and turn, short opportunity. If price then falls, fine. If it's a 3-wave structure and you move back up, also fine, because one TPs. So there's many opportunities to be had, but I think it's important to just explain it. And on the 1 hour, this is your bull, this is your bear, and this is your alternative bear. And that's it. So hopefully you find it interesting. Elliott waves, simply lovely, as we say, Max Verstappen, the Dutchie. So thanks for watching. Hopefully you found this video helpful or valuable. On the left side, you see the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing. And I hope to see you at the next one. Bye-bye.